All right, gang, welcome. So I want to do a little impromptu. We'll be here for about 15 minutes. I want to take some questions, of course, but we're going to be here for about 15 minutes. And I think especially on a day like today, with what we saw Thursday and what we saw on, today, Friday, I wanted to have a little bit of discussion of what a roller coaster feels like and how to trade it. And it may feel like this stuff is untradeable. So we're going to cover a couple basic concepts here that hopefully come Monday you can put to work. First of all, I think it's going to behoove every trader to do some basic things. And the first thing is pick a time frame. I'm not a big fan of multiple time frame confirmation, but I am a fan of multiple time frames. So while there is no one favorite time frame, it does make sense to ask yourself, really frankly and honestly, what's my time horizon? Do I want to be in for months or do I want to be in for weeks, days, or a few hours? That's going to dictate where you are on the time frame, the time interval that you choose. The weekly is going to be ideal for position trades in your portfolio, weeks, if not year time horizon, the time that you're going to be in the trade. The daily is going to be best for your daily trends, overnight trades, anywhere from a few days, 3-4 days, to maybe 3-4 weeks. That's going to be a pretty common time horizon. And the longer the time horizon is usually indicative of, on that daily time frame, the quality of the trend. So right now, in fairness, these are probably not going to be trades that go for weeks. 3 to 4 days is about what you're going to see on that daily in terms of follow through. Finally, and most productively, is the day trade. How can you have this blissful apathy of, I don't care what happens in terms of the UK and the gilt, or Powell and the rates, or OPEC and the crude? I don't care. I don't want to be subjected to the overnight volatility and the uncertainty and the lack of follow through that we're seeing. I want to trade for a very small window, an hour, maybe two, a few times a day, if even that many. And that's day trading. Day trading, all that means is I'm flat by the end of the day. And the cool thing about day trading is it gives you the flexibility to say, I'm going to be flat. I don't need follow through. I just need some setups as we go into a brand new day. And that could be any one of the 4 to 5 2-hour windows that we have throughout a single day, whether that be Asian session, European and UK, pre-market, AM US session, PM US session, right? So we have some flexibility there. Pick the time frame. That's how we deal with a roller coaster. How do you deal with the roller coaster we're in right now? The best way to do it, day trade. Day trade. However, for the first time in a long time, we are at some key levels in the weekly, key decision levels, meaning we're sitting atop of multi-year VWAPs. We have regressed to the mean on some key volume metrics by way of support. And we're trading around the 200 exponential on the weekly chart, which is a very important level. If you look at any of the holdings you have in your portfolio now, look at where they are in relation to their 200 weekly. And you'll notice that oftentimes the area of the 200 weekly is an excellent entry for longer term time horizons, 6 months, if not years, 6-month minimum, if not years. And you'll notice that when a stock is above the 200, ETF, anything, it tends to be viewed as more bullish, both on the weekly and on the daily. So again, how do you deal with a roller coaster? Ask yourself which side of that 200 you're on. I alluded to volume earlier. Gang, we're never alone in our trades that win. There's this notion that we can be there first, and sometimes we will. Sometimes we're going to be there last. But the one thing we can never be is alone. And what do I mean by alone? I can never be the only one thinking that this is a trade and expect it to work. That's akin to a surfer going to the beach, getting out the surfboard, waxing it up, paddling out in flat seas. It's nothing to do. Nothing's going to carry you. For us, volume is that wave that we're going to surf. We need those waves of volume, participation, attention, the eyes on the market, that involvement, that participation is why someone's willing to buy at X, the next person's willing to buy at X plus 1, the next plus 2, the next plus 3. That's how a market moves higher or lower. The deal that the trade gets done is progressively higher, progressively lower. That's a trend. This is the S&P on the weekly time frame. This is where we sit right now. I've got a VWAP anchored to, you can see here, not the pandemic low, although we can do that too, because to study the pandemic low, I anchored a VWAP to the sell-off in equities after the Q4 rate hikes from Powell when he was still very hawkish in Q4 of 2018. And that's been a very important VWAP, which is why I have not re-anchored it. Always anchor your VWAPs. We talked about handling the roller coaster by choosing your time frame and time horizon. Step 2, know your volume. Know your volume historically. By anchoring the VWAP in that drop, it allowed me to understand when we went to a very extreme weakness position during the pandemic sell-off, and more importantly, when we were able to recover. You want to see the proof of this? Let me show you. Somebody say, Rock, I can't see the importance. Look right here. Look how much time we spent trying to get above it, then retesting it. That was, in many ways, the floor upon which the market stood up. We're there again. Now, that alone, I hear you, that alone can't be the only reason. This is true. It really shouldn't, and it can't be. Although, remember, volume is not the same as price. Price alone means 10 contracts traded there, 20, 20,000. We don't know, right? Volume is attention. I may not know why that volume level is important because the reasons can vary. I may not know what the volume reason was for the rally in July. Some of you probably remember that. We talked about that in the Simpler Trading channel. That was one of my videos, July 7. We're right back there. It doesn't mean we're going to bounce, but if we are, that's where we bounce from. That's all I'm saying. It's not a matter ever of predicting. Predicting is a very bad habit that a lot of traders pick up. But as I was doing a chat with some very seasoned traders I respect, one I've just had met, others I've known, and I said in that group to the audience, I don't know, 500-600 people there, and I said, I've never been paid for a target. I don't get compensated as a trader to put targets out. I get paid as a trader when I have an entry, a way to manage risk, aka a stop loss, throw position sizing in there too, and then a target. And the example I've given a lot of traders, and I don't know if we're going to keep going lower or not, but I'm going to talk to you about a few things I'm going to watch out for. When we rallied back in here, I want to show you that same tool. Volume derived support. This was the support here in May. This was support here in June. And then what am I waiting for? You might say, Rod, what are you waiting for? There's 3 pieces of it. Everything came together in here. Structure shifted. Volume support, structure shifted. I have a couple patterns that I like to look for. That's it. That's it. Am I getting that here? I need structure to shift. I need structure to shift. It's not there yet. But I am at this -2 standard deviation of volume support, which we bounced from before, trying to bounce from again. I'll tell you, if we did not have the UK gilt situation, would we be higher? I don't know, but I'll tell you this. One of the reasons I said, and this is really a follow-up from yesterday's video. We haven't taken out yesterday's low. We haven't taken out the support level. But in order for this to be bullish, we really needed to close above 3680 or 3700, neither of which we did. Set up sans confirmation. So one of the pieces of advice I give traders is it's not the setup alone. Setup is check the box, check the box, check the box. Structure, strategy, whatever I need to confirm that the strategy now should be a live trade. That's where a lot of traders have a two-step strategy. They know the environment, they know the setup, and they figure, well, if the setup is visible, clearly it's time to get in. And as many of you all know, no trigger, no trade. That final piece, the confirmation that finally pulls us into the market, is the most important and requires the most discipline. And for me, that is volume, that is price, that's patterns. Until we get that, this is a cool idea that has yet to do what I need it to do to confirm that the idea has, in this case, quite literally legs. All right. Roller coasters need more patience and they really need more confirmation. Uptrends, you can buy the dip in an uptrend. You can buy a new high in an uptrend. You can buy pretty much anywhere in an uptrend. And since the path of least resistance is moving higher, we tend to see follow through. It's the easiest type of market to trade. This is very fresh, bearish chop, arguably one of the most difficult markets to trade. As you know, and I'm not giving anyone a newsflash, the follow through is painful. One day the bulls feel like geniuses. The next day they feel like the market hates them, and the bears feel like they're justified for being bearish. Be neutral. When I say I'm opportunistic about the market, I'm not saying be bullish. I probably come off sounding a little Pollyanna compared to most of the voices out there who want to tell us that we're going down to dramatic lows. And yet I don't doubt that. We just haven't seen the confirmation. Remember the pieces, right? I don't have the confirmation of that yet. What would be confirming? I need to break through the -2 standard deviation. I need to break down through that support level with higher than average volume. All of these are volume derived things that I can measure. So break through the second standard deviation, break through that with higher than average volume. And then at that point, we can start to short the rip. One place that I can tell you that if you're looking for, Rod, are you willing to be bearish anywhere and short the rip? The Dow, gang, the Dow. So keep an eye on that one. I'm sure we'll talk about it during the Rogge Report on Sunday. If you haven't joined me yet for the Rogge Report, on Sundays at 6 p.m., between 6 p.m. and 6:30, we get together for a fresh look at the market before we open on Monday, but the futures open at 6 p.m. on Sunday. So we get a really early look and we start a discussion then. I wanted to go through, again, some individual pieces of how to find some bearing, get your sea legs in this environment. Time horizon, pick one. Understand volume's role. Understand what those 200 exponentials are. That will definitely start to give you some really clear lines in the road. I hope this helps, gang. I really want everyone to find opportunity in this market. I know it doesn't always feel that way. If right now you're looking at your statements every month and you're seeing them coming down, I'm with you. But I remember that, am I down from a high watermark or am I down from my initial investment? Is it my capital or is it unrealized profit? And unless I liquidate, I haven't really lost it yet. Am I down from what I paid for the stock or am I simply down from the high watermark? That allows me to take a breath. Nobody likes to see their statements moving lower. Then we'll start to do what? We'll start to day trade to feed the swing trading or overnight trading bucket. And then eventually the overnight trading bucket goes into the investment. So it trickles down like one of those champagne cascading cool things, right? Where can we find the opportunity to start putting money in our accounts, staying optimistic, staying opportunistic, not bullish, not bearish, just hungry for trades in the pipeline. That's my foundation, gang. I hope that helps. Enjoy your weekend. Spend some time away from the screens. I'll see you Sunday at our Rogge Report. And in the meanwhile, thanks as always for your time. I'll talk with you soon, okay? Be good to each other, gang.